Aloha, everyone. Joshua Hayes at BigWaveTrading.com. It's been a while since I've done a video lesson, and it's not because of the market environment. It's because I have been extremely busy with tourist activities on Maui, with friends and family in town. I was on the Big Island for the past week, so vacation with the little lady became the priority, not the market. And unfortunately, boy, crazy times because I missed a lot of intraday action. Was back in the chat room finally on Friday, but nobody was around. Where were you guys? But anyway, posted some charts in there. I'll go over it just to show you guys what we look at, what I look at intraday, what we also as a team look at intraday regarding day trade setups, even though Friday was really just a SPY TVIX day with my main focus on SPY. First thing I'm going to go over, though, is the daily chart of the SPY. Now, also, I want to show you a weekly chart. This 200 weekly moving average is always my top indicator that I use to confirm if we're in a bull market or bear market. When we get below the 200, stay below the 200, and then begin selling off, we're in a real bear market. But that's the time to really be careful. And that can even be, you can see this on this chart, that it happens in 2008, but God, that's even with using shift. But I also wanted to show you it happened in 2000 to 2001 also. We get below the 200, try to get back above it, but then we stay below it, and we just stay below it, and the 50 guides us lower. In 2008, we get below the 200 weekly moving average, stay below it, 50 guides us lower. So for now, let's see, we don't really have that. It's a small, slight setup on a weekly basis, but this is the key line I use to determine if we are actually in a real bear market or not. This has been panic selling. We could be in a bear market, but there's still a lot left to the imagination. The Russell 2000, there's no ifs, ands, or buts about this. This thing's in a bear market. QQQ still hasn't gotten there yet. DIA, it's on the cusp. It's below it. We'll see how it reacts now. But the IWM, this is the index, the Russell 2000, that I want to see lead, not lag, during an uptrend. We did not see that whatsoever in 2019. It lagged. And the one thing you don't want to see in a downtrend is it leading. And it's leading. So not only did it lag on the way up, it's leading on the way down. These charts aren't pretty. If there's any positive sign in this technical setup, which is one of the ugliest looking charts I've seen ever in my career, and that beats 2008. It was not around in 1987, but I back tested these things going back years and years and years and years. Telechart even allows you to back test Dow Jones Industrial Average. Let's see, how far back can we go with this one? This one goes all the way back to 1916. And you better believe I've back tested all the way back there. You can't find charts like this in such a short period of time, especially coming off all-time highs. But nasty distribution, nasty bop action. The only good news is it looks like it's getting a little bit better as we get worse down here. But all this overhead resistance, you can even do Fibonacci retracement starting measuring from here to these lows, here to these lows. Do a Fibonacci retracement starting here, going down to here. And you can just see we have resistance here, here, and then all those fib retrace levels. But if there is anything positive, it's that there's a slight positive divergence in the balance of power on all of these indices. That being said, that's definitely not enough to get me active in this market, which then also brings me up to my next point. I had positions going into this week, but on Monday, following the market-wide halt, the few remaining positions I had came out of that halt, and I couldn't figure out what I had at Interactive Brokers and what I did not. The trade statements didn't match up with the positions. The positions weren't matching up with what it said that I had, what I thought that I had, and I really didn't know what I had out there. So I probably did something stupid. I probably could have sold all of the stocks that I only had stop and limit orders on. I think the good to cancel sell limit orders messed with the system there, and it was counting those as shares that I owned when I didn't. Supposed to just be profit targets. So I did something I've never done in my entire career. Never done this before on an end-of-day basis. Never had to do this in 2007 into 2008. Never had to do this in 2000. First off, didn't have these orders back then. But back in 2008, I still had positions, even though I didn't have stops. I never went in and sold everything. But on Monday, following the halt and a review of what I could be long, not long, how many shares did I have, what didn't I have with Interactive Brokers, I press the sell all button. It asked me, are you sure you want to sell all? Press yes. Asked me again, are you really sure you want to sell all of your positions? I pressed yes, and that was it. On Monday, this day right here, I was out of everything. 100% cash in the end of day account, 100% cash in all of my day trading accounts. Now I'm on vacation, and for the first time ever while on vacation, I can actually focus on the vacation. Markets got worse, so that looks like that was a great idea. And of course, following Thursday's sell-off, had a phone conversation with the client, told him, we're going to probably get a huge rally. I don't suggest dumping now, but you can think about pulling your stocks out of a long-term portfolio if you want to move it from one firm to the other, if you don't want to roll over, etc. And we got that face-ripping rally. But lower volume on the SPY, lower volume on the IWM, lower volume on the DIA. The QQQ did have higher volume, so I am watching that. But the only index to do an undercut of the previous lows and then rally was the IWM. The DIA, SPY, QQQ did not do an undercut and rally. So with that being said, it's not the most bullish setup. Could it be a low? Yeah. VIX got up to 70s, right? VIX got up to 70s, so it's possible. But I believe we're going to need to do a lot of sideways work and or retest those lows before we move higher. Now, with that out of the way, going to go ahead and just pop this up. This is my 4-chart pane that I look at whenever I'm trading intraday. You can see GLBS was up here because following the strong volume surge in the morning, it was on watch for a potential, reset up or VWAP reclaim and a run to the end of the day. Didn't happen. TVIX and SPY has been my main focus during this market sell-off. You can see TVIX, how much did that move at that point intraday? God, 20%. But the SPY is the big thing. And this indicator here, see how well it worked there late in the session. That's even after hours. I didn't even see that after hours. Gosh, that's super tightest squeeze. Triggers with negative momentum after hours. Freaking over a 0.5% move. Could have played the leveraged positions. But the bottom line is the SPY and TVIX have been my game right now. That's where I've been focused. But before I move on, I just want to show you, this is what my main chart looks like. This is what right now the 1-minute chart's like the 5-minute chart. I just want to show everybody what we're doing intraday, what my focus is on. It's basically on the SPY whenever it comes out of squeezes. As you can see here, there's a little squeeze, positive momentum, a little move, but that's not the big deal. What I want to show you guys, it's whenever we get these super tight squeeze in this super volatile environment, momentum going lower, what does the SPY do? Ba-dang. Super tight squeeze, positive momentum building. What does the SPY do? Rallies. Sorry, guys. Hard to grab this. Super tight squeeze, negative momentum. What's the SPY do? Sells off. And then that late day rally at the end, super tight squeeze. Even over here, positive building momentum. Get a fake out. Get rid of that. Updating drivers. Don't need to know that. Super tight momentum, positive squeeze, get a shakeout. Loose squeeze, positive momentum. We get that huge end of day run that sent stocks exploding into the close. That sent the calls that I was looking at from $2 to $10 at the close. So that's how I'm looking at it intraday. Might as well see if I can show you the chat room. Hold on, everybody. So this is the chat room that nobody was really around on Friday for. You can see in the morning, the stock CPLG halted on the way up, halted, then opened, push higher, push back below. But do you see what happens after it retakes the halt price whenever it has actually liquid trading? Everything else in the morning, super thin, no interest. It did make a nice 20% move, but I post these charts all day. This was GLBS. GLBS, nice move here, but it never pulled back to the halt price, so it was never really an area of interest for me. I was not around during this portion, but do you notice the heavy volume on the way up? Lower volume on the consolidation, heavy volume on this push. Not only that, but once again, what I keep showing everybody, enters into a squeeze, still in a squeeze, starts to come out of the squeeze, positive momentum with that volume, you had another 20% move in GLBS right there. Then I showed IFMK how I passed on this one as a daily setup. This hammer bar was a long signal. I passed on it, but I didn't at the time look at my TTM squeeze, and it went from the tightest to the medium to the loosest with that building positive momentum. Should have taken IFMK long, moved up 60% in 3 days, but this market kept me out. And then once again, I'm showing everybody the SPY squeezes as they set up, announce them before they happen, show them what it looks like post the squeeze. This was OSUR at the end of the day, showing everybody how that little 7% plus move right there happened after a squeeze with positive momentum. So a lot of opportunities intraday, but on an end-of-day basis, it just remains too sketchy right now. So before I wrap this video up, I want to continue to tell everybody, hey man, my end-of-day count, listen, I did get one new long signal for Monday session, and I'm taking it as a long signal. It's canceling quality. It's perfect speculator quality. It was confirmed in my price volume BOP surge scan. I gave it out to all big wave trading members. So it's technically a speculative position because the price action is more volatile than what it usually is. It's got a higher ATR, and it's actually outside its average true range for the past 20, 50-day period. So technically in this market, it's speculative because it's not a $50 stock. It's not a $20+ stock. So it's speculative. But I gave it to gold members also in the video lesson. But it also has a squeeze and is coming out of the squeeze with building positive momentum, just like what you'd see here whenever the blue lines start while it's in a squeeze. So it's a good long position, but everything else, nothing lined up. So there were no other long positions. And in fact, that's the first long position the entire week. Following Friday's session, there hasn't been any. Monday, Tuesday, Wednesday, Thursday, didn't think there would be any Friday. We still had one. But moving on, unless you're a pro, unless you know how to modulate, reduce your position size, keep tighter stops, which I am, very, very aggressive with my stops now. Definitely, initially, I would give stocks room to work at first. No more. There's a stop level. Then if it gets filled, the first stop is that day's low a day of the fill date. Whatever the fill date's low a day is, -1 cent the first 50% stop. The next stop is the most logical, and final stop is the most logical, rational support level. But what I wanted to show everybody is that this SPY chart, okay? This is a daily chart. MACD, there is no sign of any curl, even with this one-day price gain. TSV, big bearish move, downtrend, no series of higher highs or higher lows. But the RSI, notice this has a little higher low right now. Doesn't have a higher high just yet, but it's interesting to note the RSI might be forecasting that a further bounce is in store, but the MACD and TSV is not confirming. So for now, not that interested. The DIA, same thing. Down, down, RSI. It's a little interesting. Doesn't mean it can't get worse. Just, I'm noticing it. Nothing I want to do with it yet. IWM, the most important one, not quite there. MACD is still ugly. TSV is ugly. RSI is still technically ugly. The Q is still a little bit better, like I said, with the price action and the volume surge. Got the positive divergence in RSI, but overall, TSV and MACD is ugly. Now, what I want to wrap this video lesson on, though, is the one point that I continue to drone upon video after video after free video after free video. This monthly time frame. More importantly, this time segment volume. I'm going to remove the RSI. I am going to remove the MACD. Well, let's just keep the MACD up there for now. I just want to let you guys know, on a monthly time frame, I know when I need to increase size, be quote, quote, reckless, not really, but aggressive, I guess you could say, with long positions. And whenever I get a hot chart, go all in. When is that time period? The same as it's always been. Whenever I have this monthly time segment volume line moving up above an upward sloping or signal time segment volume or moving average line, MACD confirming, great things happen. When the MACD and TSV are negative, bad things happen. Reduce size. Don't get aggressive. MACD and TSV is positive. I get hot charts and or just good setups. Increase size. Be aggressive. Right here, MACD is moving up. but the TSV is kind of flopping around. Need to have a measured approach with my long positions. Down and down, bad things happen. 2008, 2009. Now moving forward, TSV moving up above the average line with MACD confirming, good things happen. Be aggressive. This entire time when it moves up and TSV moves sideways, still worked out fine. This is why price is all that matters, but still got to be a little measured in my approach. Then once again, when TSV goes positive with a positive sloping moving average and MACD confirms, be very aggressive. 2016, 2018. Then when the MACD goes below its signal line, and so does the TSV, be careful. But here's where things got weird. QQQ broke out to all-time highs, moved higher. The SPY continued to move higher, but during the entire time, the TSV kept trending lower. Now, this is the SPY. This is the IWM. This is the DIA. This is the QQQ. Just memorize that MACD, pause the video lesson, go back if you have to. I'm now going to remove it. Move pane, pin. Now we just have the TSV indicator on here. And I'm going to actually increase the TSV indicator size. So, during this last final uptrend, I want to show you something. This is a monthly chart, 2018. The monthly TSV crosses negative here. That is back in September of 2018 for the QQQ. Since September of 2018, the QQQ, not once does this TSV line go above the moving average. I go and look at the DIA. This thing also crosses in September of 2018. Not once does this line go above the moving average. The SPY defies all reality, keeps moving higher. Meanwhile, it too crosses in September of 2018. And not once crosses above the downtrending signal or moving average line. Now, the SPY, it did something that I don't think it should have with this line. The QQQ did something I don't think it should have with this line. The DIA did something I don't think it should have with this line moving this way. But it happened. That's why you always obey price. But here's where I was wrong. I thought the TSV was lagging. That price was so strong, the economy was so strong, that once this line, TSV, got above its signal moving average line, and once that moving average curled higher, boom, we would be off to the races. I really did. But during the entire time, I bitched about volume, hence why the time segment volume is going down. Bitched about volume, but what I bitched about the most was the Russell 2000 lagging. Now this one crossed back in June, July. It actually technically crossed, I guess, in July of 2018. From July of 2018 to now, this indicator has been trending down below a downward sloping moving average. Once again, I was thinking to myself, hey man, once the IWM starts leading and then that time segment volume line turns and curls, boom, we are off to the races. That's what I was thinking. But instead, the IWM lagging and how the IWM acted as a price from that high there to this high here, it lost 1.63%, while the rest of the market kept moving higher. Hate that the Russell 2000 was lagging, hate that we don't have any volume, and now look at what's happening. So here's where I was wrong. I thought the time segment volume line was lagging. Price is always right, right? That's what I thought. Not the case. Time segment volume was right. Price was a liar. You could still make money on the upside, but think about how much people have lost on the downside. Even me, from the 2019 account highs to where I'm at now. Hey, ask me. Ask me in the comment section. That'll make most of you guys post comments. Ask me how much I've lost off the 2019 highs. It's my biggest drawdown since 2012. I'm in my current biggest drawdown since 2012. That being said, do I have the vast majority of my cash still on hand? You better believe I do. Did this pullback wreck me emotionally, psychologically? Absolutely not. Mentally? No. That's why I got a new long position for Monday. I'm not afraid. And I'm ready for the market to turn higher whenever it wants to turn higher. If it wants to keep going lower, great. We'll keep day trading SPY puts and the TVIX on the long side intraday. That's what it takes. And there's always going to be a stock in play. Maybe the next coronavirus stocks. AIM a few days ago, AIM moved 100% from its setup and uptrend intraday. That was a 100% intraday move in a couple of hours. So they're still out there. There's plenty of opportunities. I know how to find them. I know what I'm looking for. Elevated RVOL, catalyst, positive price action. We get the proper setup around the VWAP, 9 EMA, 21 EMAs intraday. I also have all these moving averages. Intraday, I use all of them. 9, 21, I think that's the 21 here. Yep. It looks a different color on this chart. 50, 200, I use them all. Don't use these ones. EMA, 200, that's the 100 right there, I'm pretty sure, right? Yep. So I use all these, even intraday, but I use it along with VWAP. Here's what it looks like intraday. These are the charts I use. Let's go back. That's what my intraday setup looks like. I use a combination of all these moving averages with the squeezes. Balance of power you can kind of remove. Like I said, I'm just used to it, so I always look at it. And I use it in combination. And whenever we do get the proper setup in something like GLBS right here, even this move right here, starting from the breakout area, there's a 30% move. You got a 30% move in there. CLPG was it? Or CPLG? Let's see if I write that right. Good job, memory. The retake of the halt price to the high, 20% move. So there's always areas to make money in the market. But the bottom line is, if this market ever again does what it just did to me, I'm going to know, hey, I'm obeying price, but price is lying. The one indicator that has never lied to me has been this time segment volume line. It has never once lied to me. And here, while it didn't make any sense what was happening in any index besides the IWM, come this most recent market correction, it all now makes complete, absolute sense. And just to show you how well this line looks, I don't know how far back I can go on this. There we go. We can go far back. You can even look back here in the 90s when we were moving higher in the 90s. Look at this time segment volume line. The 1998 LTCM crisis took it below it, took it right back up, and we stayed heavier. And the time segment volume line didn't get nasty into 2000, and it didn't get bullish again until we finally found a bottom in 2003. This line is magic, everyone. All right, super long video lesson, but it's been a while. So I wanted to give you guys more than you bargained for. Anyway, please do me a favor. Give me a like or a thumbs down. I don't care. Great, whatever. Leave a comment. Ask me questions. If you're having trouble with this market, let me know. I'll tell you what you need to do. I know how to navigate through markets like this. Subscribe if you haven't. I see the metrics. I see a lot of people watch this video lessons, but they don't subscribe. Subscribe, ring the bell, whatever it takes. Show me some YouTube love. I would greatly appreciate it. All right, everyone. I'll have a video lesson, public video lesson on Wednesday because I'm back at my house. I'm back in front of my monitors and my computers. I'm a happy man. I like vacations. Don't love them. Can't figure out why everyone loves them so much. Exploring the world. Not interested. But I love where I live and I love what I do. I don't need to travel. Maybe you do. All right, everyone. Aloha.